ended up making a deal. I think a lot of great things are going to happen in the Middle East right now, and very importantly, the oil is plummeting down, and the stock market is shooting up like a rocket today. Iran will not have a nuclear weapon. They fully agreed to that with strong policing powers, and they won't have a nuclear weapon, which is what it was all about, because they probably would have used it if they had it.
Oil at 75 and the Dow at another record as Wall Street sees its best three-session run in over a year. So is the enthusiasm overdone, or do we have plenty of room to run? Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Taylor Riggs, Lou Bassanese, Lydia Hu, and with us for the hour, Barron's Investor Circle newsletter editor Josh Schaefer. Good to see you, sir.
Good to be back.
All right, call it a triple threat. An Iran deal set to be signed Friday, oil collapsing, which could tame inflation, and the AI boom showing no signs of stopping. Now the focus moves to Kevin Warsh, who's kicking off his first Fed meeting as chair today. Interest rate futures now show a 43% chance of zero Fed rate hikes through the end of 2026. So do the bulls have every reason to run here? Schaefer, I'm coming to you first. Or we getting out over our skis a little bit on Iran enthusiasm? What do you say?
I don't think the market is over its skis on Iran enthusiasm, because if you're thinking about how the stock market's going to act, Brian, it's going to trade on what oil is doing. And if you have oil at $75 a barrel on WTI, its lowest level since the first week of the war, that screams risk on in equity markets to me. And I think also you mentioned that best three-day rally in over a year. Well, what's been leading this market? It's still tech, it's still AI, it's still semi. So you had that SOX index, semiconductors, go down over 12% in a two-day period early June. It's now up 15% from that period. That's where a lot of your S&P 500 earnings are. And candidly, it doesn't have much to do with the war. So I don't think necessarily re-escalation is a risk to the semi-trade overall. So I think right now things sort of make sense. Does Warsh change it tomorrow and things start going a lot differently? Perhaps in 24 hours things look a little different on a day-to-day basis.
Okay, we got a lot to talk about. Yeah. Lou, I noted oil's at 75. Okay, it's fallen pretty quickly. I think you were saying there's a level at which it's not going to go below. Maybe that was in the 60s, not the 70s.
Yeah, I think.
But things are moving here pretty fast.
No, and I think this is key. Oil is the relief, because yesterday I was on air and pointing out that we hadn't broken below 80 yet. Right. Now we have. This means this war is over. The relief rally is in play. AI is the new macro, to Josh's point. It never ended being the real macro play. It really is. Now you're getting back to earnings fundamentals. The Fed. So a lot can change in 24 hours if Kevin Warsh comes out a little hawkish in some comment, phrase, or the dot plot reveals that the Fed presidents now think a hike might be in order as opposed to easing, which, if you remember from March, they still had some easing on the calendar potentially for this year. But I think earnings, the running of the bulls is not until the first week or second week of July in Pamplona. We're running all the way through that based on earnings, because the earnings growth rate has been better than expected for 6 quarters in a row. Q1, Q2, I don't think is going to be any different. Mag 7 up 63% average earnings growth in Q1. That's the backs and the fundamentals that a bull rally can keep running on.
Okay, Taylor, I'm excited for the day when the Fed says less about everything.
You're going to get it.
Now, Warsh is going to talk tomorrow. I would be shocked if he said anything particularly hawkish here. But how do you think the Fed plays in all this? And generally, what are you seeing in these markets?
Well, I think what's interesting, this isn't a direct correlation, but if a two-year yield is still above 4%, 4.05 right now, and our Fed funds rate is 3.50 to 3.75, the market's still thinking there's going to be a cut eventually. Again, the two-year yield isn't like a total direct correlation, but they're kind of saying, well, we're certainly not cutting. Tomorrow, will we hold? Absolutely. But I think the market's still, trying to figure out we're not going back to 350 on a two-year anytime soon. He'll come out. I think that as we've been talking about, a classic supply shock like we've had is not long-term inflationary. This is the definition of transitory, to use that word.
Don't say that word.
Lou's giving me looks.
Oh, no.
I know.
The Powell curse.
I went there. So that's the good news. But, Brian, if everyone's rosy on this table, I'm going to have to bring it. Import prices.
What about them?
Horrendous? Is that too strong of a word? I don't like it. Let's talk about it. back-to-back import prices that are now much worse than expected, up 1.9% in May, following a 2% increase in April. And that's not fuel, because ex-fuel import prices were still up 0.8% in May, following a 0.6% increase in April. The good news, capital goods prices, all led by tech, are up 5.6% year over year. But what this means to me, Brian, is that when now domestic manufacturers are going to have to increase their prices because their import prices are going up. This isn't just oil prices. This is a little bit broader than that. And this is starting to show, and I don't want to say who had to cave first on this deal. I don't want to play that game. But this does show that it wasn't just Iran who needed to make this deal. If we're starting to see a broadening out in these import prices, this is going to take longer than we thought, I think, to bring it back down. Now, is it only a couple weeks or a couple months once the Strait opens? Yeah. Maybe. That's awesome. That's great. But I can't have prices rising 2% after a 2% jump the last month and say things are great, we're cutting.
Yeah, I don't have the correlation, but maybe you know. If we look at oil and gas, it takes about 2 months for the knock-on effects to play in there. So is it the same on import prices? Don't know.
Okay, so Lydia, we're talking about what's going on in the markets. It's all kind of predicated on talk about the deal, okay? You're my resident lawyer here who likes to pay attention to words and agreements. We don't have one of those yet.
No,
I mean,
we're still waiting for this.
They've signed something
deal,
electronically,
right?
I guess.
Details.
We're talking about something we don't know a lot about.
So the market is crazy happy. We have not seen the memorandum. There's wild speculation. I think that's kind of irresponsible, frankly. Some of that coming from Iran, some of it coming from I don't know where. But does the lawyer in you say, everybody slow down just a second, let's wait to see what the words are on paper, and then let's evaluate what that means?
The lawyer in me says yes and no. I think big picture, long term, I have faith and confidence that this administration is moving us in the right way with a geopolitical strategy that is making us energy independent. We are pivoting away from reliance on Middle East oil and definitely turning toward the Americas for America's production, being an energy leader and energy dominant. But what we don't know is what you say is in the short term and getting through these summer months and getting through these next 60 days when it comes to negotiating and ironing out the Strait of Hormuz. How does it stay open? Does it stay toll-free? Oil production back there. In the short term, we still need it. The world still needs it. And there's been major damage done to those oil fields. How long is that going to take it to get back up and running? I think all of this takes a lot of time. So I think the enthusiasm and the optimism I appreciate, but I think it's just going to take a small hiccup for any of this to fall apart. And part of this with Iran is the nuclear program, too.
Right.
Our Vice President, J.D. Vance, was on this morning with Fox and Friends, and they were going over some of the reporting about the possible terms of the deal. Iran is out here saying, when it comes to the nuclear dust, it's not about turning it over, it's just about a dilution of it. And, J.D. Vance said something to the effect of, that's a lot of Iranian propaganda. And it probably is a lot of Iranian propaganda, but it has to make you pause and say, where are we exactly? And what is going to happen in the next 60 days when all this was about making sure they don't have a nuclear weapon?
Pausing is not something we've done much of in the markets, Josh. I mean, there have been some days. Look, I don't want to say there haven't been some days, but lately it is up, up, up. I guess I'm a little bit of a skeptic that Iran's going to want to keep the deal. I'm a little bit of a skeptic that they're not going to want to create some problems. And so I get oil is 75. I love that. Can we take that to the bank? What can we take to the bank right now in terms of what we're seeing in the market? And what should we hold at arm's length and say, get ready for that to move around a lot because we're dealing with Iran?
I think what you can take to the bank is the fact that higher oil prices don't impact the high-end consumer, which is what's been driving the stock market. So if we're talking about import prices increasing, yes, that's going to be a problem economically. I totally understand that. But what drives the market and what has been driving the market isn't that impacted by this increase that you're seeing in oil prices or inflation. That's been the market vote over the last 2 months. Its earnings estimates continue to move higher for the big tech companies that are driving this rally, and that's real estimates from their earnings that they already reported. They're telling you that they're going to do better in Q2 and Q3 and make more money than they thought. So from a market perspective, it's simply that I don't know that this macro issue can fully derail the AI rally. Maybe if we can make a case to a Fed hike or something of that matter, that's where you get the real issues. But just simply looking at oil and what it's doing to inflation right now, I don't think it matters.
Yeah, and the other side of that, we're talking about the K-shaped economy, right? If it's not impacting, high oil prices weren't impacting the high-end consumers, now lower oil prices should impact positively the lower income brackets. So now you have a double whammy of two positive spending catalysts versus before when we had one split.
On that spending, too, more on the CapEx side, I know we'll talk about SpaceX later, but when you think about SpaceX, OpenAI, and Anthropic, and all the money that you're raising, you have to put that money to work. So one note this morning says they just raised $85 billion. All of those other companies are going to raise, I'm assuming, billions. They have to invest that. They're buying chips. They're investing in the AI data center revolution. They're investing in AI data centers in space. So that fuels then more of this sort of CapEx rally and the chip rally, I think, that we continue to see.
So let's talk about SpaceX, because I think there's a lot to say. Before the show, there was a lot to say about SpaceX. I think there's a lot to say. Tee us up, Taylor, with what you got, and let's go around the horn.
I'm bitter.
It's Josh and my fault.
I am ticked off.
I told you.
You know why?
I told you.
Because everyone on this panel on Friday said, don't buy it. Wait till it falls back below 135. Holy smokes, we're at 212 on SpaceX. They overtook Amazon and briefly Microsoft in terms of market cap. Now, a lot of people, I think, will look at that and be like, that tells you it's overvalued because the revenues are shockingly different for these companies, big tech versus SpaceX. But I am floored, I think, at the move higher. I know it's only been 3 days, but I think a lot of people, these are why they're believers in Elon Musk, but talk again about some of the technicals, Lou.
So I think, look, this is why you never bet against Elon Musk. He is the best marketer in the world. They IPO, and the next day he comes out and says, hey, the highest mark for revenue by analysts is hundreds of billions. I say we can do $1 trillion. Great marketing, sends the stock ripping. It's trading like a penny stock because there's not much supply. Only 5% of the shares. That 555 million shares that were offered is only 5% of the float. Most of it's locked up. So it's basic supply and demand economics, which Brian, I know, can understand. And then you have leveraged ETFs, and then you have options. So every single share that's available is being hypothecated and rehypothecated umpteen times, fueling the mania.
I do want to say there is fundamental news today. They did come out with a $60 billion purchase of the company that backs Cursor to sort of automate coding. And so this shows that they're in it to win it when it comes to the AI race. And so I guess not reacting to the downside because of this deal, but excited because maybe that helps put Grok and XAI further in the leaderboard.
Josh just gave me this whole soliloquy on earnings, and then we talk about SpaceX. And if it was trading at, if it was coming out at 92 times revenue, what is it now? It's way beyond
well
that.
over 100 times sales now.
So what about that?
That's why I said that I wouldn't be buying the IPO, because we, at the Barron's Investor Circle, our stock picks that we're making that are 12 months out, we're not trying to trade anything. And at this point, it's a trade. And that's fine if you want to get in and get out and do a trade, but know that you're doing a trade, not an investment. When I see a stock go up 20% one day, 20% the next day, it was up 20 at one point today, now it's only up 10. You have to be watching that thing like a hawk and have your stop set in and really be trading that stock if you want to be in that name. I'm more interested in just a long-term investment, understanding the growth trajectory.
Lydia, did you get in on day one?
I did not. And you know why? It's because I talked to Lou Bassett last week. We talked about how we're going to wait for it to go on sale, and that's where you usually find me, is combing through the sales rack. So I'm with you, Taylor. I'm a little bit like out of sour grapes over here.
The sale is coming. Think about Alphabet last April at $135 a share. You would have made well over 150%.
I will say, David Bahnsen put out a great chart on Friday that showed all of the big tech IPOs, and 1 year later, they were like double-digit lower.
Look at Tesla's chart. It
40% drawdowns, and I know you've been talking about
that. There's still a lockup period. We just didn't mention that. There's a lot of people that have owned this stock for a long time that aren't allowed to sell it yet, and will be allowed to sell it at that point, and we'll probably want to realize some of those gains.
Well, if you would have listened to me, Taylor, but never do.